Crypto Hotep here with another investing video. We're on week 60, big 60 of the family stock portfolio and dividends tracker. Now, if you're unfamiliar with these videos, feel free to go to the channel, go to week number 1. That's where I go through my whole methodology, the background behind why I'm doing this. And basically, if this is your first time watching it, what I did was I made a short list of stocks for my family to choose from. They chose stocks based on who they liked, who they resonated with, what companies they're familiar with, and then we proceeded to use M1 Finance as our broker of choice. You'll see shortly here with M1 Finance, you can create a big portfolio and then have sub-portfolios in it. Every one of my family members, they have their own portfolio or pies, as M1 Finance calls it, of the stocks that they're choosing. And every week we go through these stocks. We go through balances, dividend activity, our feelings, emotions, and any big news in the market, just to basically track our investment journey. If you find these videos helpful, feel free to like, subscribe, comment. Let us know what you think. Support the channel. Feel free to comment as much as you can so the algorithm does its thing. But by no means is this financial advice. With that being said, guys, we'll jump right in. But before we go to week 60, we're going to go to week 59. So last week, we had a negative weighted return of a negative 5.47, negative gain of a negative $115.06, dividends earned of $7.08 for an overall balance in the family portfolio of $22,0635. Now, this week, it looks a little bit better. And before I go into and unveil the balance and the rate of return, I want to look back at week 48. Week 48 was the last time that our portfolio was in the green before the onslaught of the tariff talks, just the market getting spooked, tanking our portfolio and having us in the negative 5-10%. We were about, I want to say that was about 3 months ago, we had a positive rate of return of 4.07% here, and our balance was only 1913. Let's see what happened this week. If you look at that, we are back in the green year to date. So again, we haven't cracked 1% yet. That's completely fine. We're going to celebrate the small victories here. So we are in the green year to date, 0.81% positive of a market gain of $7.03, dividends earned of $9.09, and our balance is $23.29.44. So what's been going on here? So we did have a lot of dividend activity between this week and last week. So let's look here. If we look back at last week, which was around here, we had dividend activity from Lowe's, Deere and Company. We had our buys that we went over, and then we did have some dividend activity from American Express, as well as Colgate, Apple, O Realty Income, and Procter and Gamble. So again, if you're looking at these dividend payouts, and of course, we're working with a small account here. They're only pennies right now. And you're saying, Crypto Hotep, these are just pennies. These mean nothing. Look, you're correct. They're only small amounts. But again, dividend investing is more of a marathon, not a sprint. And you're going to build up that position as you go. And this is a nice little overhaul. Just think, if we steadily build our positions in Procter & Gamble and O, these dividend payouts are going to be that much greater. And speaking of that, if we look at our dividend activity here, let's see what we got here. We go to dividend income. We can see our total income so far in 2025 is about $29.49. So this is basically what's projected to come as well. So this is all encompassing of that as well. Okay. And so we can see upcoming dividends that we have. We have some from Costco, Caterpillar, Walmart, Starbucks, Kroger, Target, Smucker Company. We can see some that are still pending, and then we can also see some that are estimated as well. And then if we go down, we can see our holdings also, and then the dividend yield for those holdings. Okay, so as always, guys, we go bottom to top. Let's go to the bottom. Unfortunately, despite us being in the green, wife's still at the bottom, but with a very impressive year-to-date return of over 8%. Again, guys, our wife's stocks have had sort of a roller coaster ride here, but it seems to have found its footing, and it's all backing because of Celsius. Celsius has turned around from late last year. So my wife's rate of return year to date, 8.03%, market gain of $13.08, dividends earned of 46 cents, total in her portfolio, $233.86. As I mentioned, Celsius, her year to date Celsius position is worth over 54%. Celsius, it's crazy. Tesla has finally found its footing and in the green now, up over 3.25% here. Google still down over 12%, still at a good buy to me. And then Pepsi down over 14% here at 52-week lows for Pepsi. Let's go to our middle. Our middle is down year to date, negative 3.74%, market gain of a negative $9.01, dividends earned of $1.17. Balance in our middle is $249.57. So the culprits right now, Amazon's taking a little bit of a tank, but Costco is still going to Costco. And between this and last week, Costco has gone up, I believe, about 2 percentage points here. It went from 8 to 10%. Sony is up over 13%, and Google is up over 11% in our middles portfolio. Tesla closed the gap, but we still have some room to grow. Still have some room to go in the middle stock portfolio, down over 5%. Starbucks down over 5.5%, and then Target still dipping, down over 26%. I'm not really worried about Target though. I don't mind buying Target. Our youngest, we're starting to get into the green here. Our youngest up over 3.6 or 3.76% year to date. Market gain of $8.57. Dividends earned of 47 cents. Almost cracking $300 worth of stocks in our youngest portfolio. That's amazing to hear. I really love to hear that, only because I never heard that when I was growing up. Never was educated about investing, financial literacy, anything like that. So it feels real good when I can say my kids have these stocks at a young age here, and even at an older age. Honestly, it's just having that knowledge that's so great. So with our youngest stocks, Sony making the bulk of it, over 19% for Sony. Costco, again, as we mentioned, up over 14% in our youngest. And then Apple still at a discount. Tesla still trying to find its footing, and Starbucks still down as well. And let's go to my stocks. My stocks are up finally, so up over 3% for me year to date. Market gain of $15.82. Dividends earned of over $5.11, with my balance being $7.6786. So technology has made some ground here, and we're only down 1.35% year to date. Technology has been down over 10% over the past 3 months. So definite growth here that we can see. Finance up over 6.94%. As we spoke about, we did add Berkshire Hathaway for the GOAT. Warren Buffett here. We haven't added any money in that position as of yet, but we will. But everything in the green on the finance side. American Express, Moody's, Visa, Aflac. Nothing but a sea of green right there. Industrials and energy is still one of the most consistent sectors in my portfolio year to date. And I mentioned this. I said I was going to do this year. And Waste Management, Caterpillar, Duke Energy, Chevron's the only one. And honestly, Chevron has been closing the gap on the negatives as well. Deere Company, ExxonMobil, Centos, Union Pacific, all looking very, very lovely here. Restaurants and food consumers and staples is down a little bit over 2%, or almost 3%, I should say. But restaurants and food up over 9% for restaurants and food. The GOAT, Coca-Cola, up over 16%. You can't beat it. Texas Roadhouse up over 15% with Texas Roadhouse. Inflation still kicking. Texas Roadhouse is still doing what it does though. McDonald's up over 9%. Domino's Pizza up over 16%. Smuckers almost up almost 4% here. And then Hershey closing the gap again for Hershey. I really like to see that with Hershey. Okay. And let's look what else we got. Real estate up over 0.03%, not too much here. And then our growth stocks. So growth stocks, we have Palantir, which is ridiculous right now. And Palantir is one of those positions where it's like, man, if I could only have bought more. But up over 69% on Palantir. Tesla down over 13, almost 14%. But as we mentioned in our other portfolios with our other family members, it's closing the gap here. MicroStrategy up over 37%, and then CrowdStrike up over 25%. It's just a fantastic portfolio. But again, our growth stocks is a very minimal and modest 5% of our entire portfolio, because we're playing it a little conservative here. Okay, so let's go to our oldest. Our oldest down 2.75% in the negative year to date. Market gain of a negative $21.43, and then dividends earned of $1.88. Her balance is $778.90 for our oldest. Our oldest, the main reason for this is Apple's discount here. Tesla is, as we mentioned, it's the common theme, closing the gap here on Tesla. But McDonald's, almost 9%, almost up 9% on McDonald's. And then Costco, probably seeing a theme here with Costco, staying in the green with Costco here. So all in all, our oldest has a very simplistic portfolio, but it works. And again, these are just the markets doing what it does. So I can see our oldest stocks getting even or boosting even more as the market kind of solidifies and resumes what it's been doing. But all in all, family portfolio looking very good year to date now. We're finally in the green. And just, as a brief message here, this is why it pays to invest into quality companies and don't try to time the market. It's more about timing, or it's more about time in the market versus timing the market, for this exact reason right here. And the reason being, it was 3 months of nothing but red after red after red. We were doing these weekly videos with negative returns on our portfolio for about 3 months straight, and we were still buying, still holding true to the companies that we chose. And here we're starting to see a little bit of the light at the end of the tunnel with this first sign of green with our money weighted rate of return. Now, could the market turn tomorrow or next week and then fall again, and now we're back in the negative? Yes, it can. And this whole thing could last for 2 more months. Who knows? No one knows. But eventually the market will reverse itself and continue higher. And it's just understanding those market dips, those ebbs and flows of the market, and then also understanding your company that you invested in. I think that's a big point that a lot of people don't point out, is understanding the asset or the company that you actually put money into, and knowing how they make money and how they control costs and those type of things. And it'll make you feel better when you have these dips. But as always, guys, I hope this video is helpful. Feel free to like, subscribe, comment, let me know what you think. But as always, thank you and happy investing.